a couple things we're doing. So I want to start right away with Annette and Ian from who are going to talk to us about trans. And again, we're going to record this.
Can you hold 1 second?
Yeah.
I've got a technical issue here.
Sure.
My Zoom launched. I just converted to my laptop. There we go.
Okay.
Oh, it says Ian. I'm not
You're Katrina.
I've got to change.
So let her change that. You can go ahead and so thank you.
Yeah, so I think you guys, I know a lot of you guys know what trans is, but I think you can never review it to really understand it.
Right.
And I think the complexities, not the lack of trust we have right now at the government, at the higher government level. I think this is important for you guys to take a look at what you're doing for your organization. And so we're going to talk to you for about 15 minutes or so about that and a deadline coming up this Friday. So Annette, are you going to kick it off?
Actually, I think I'm going to let Katrina introduce herself, but I will, and then I will go into it. Do you want me to put the slide up, Katrina, or do you want to? I think while we're all in this.
Yeah, that's great.
Yeah, and just I quickly do an introduction, like a three floor introduction.
Yep.
Elevator.
Sure. So my name's Katrina Johansen. I am the executive director of the California School Finance Authority. We are one of 16 boards, commissions, and authorities that are housed within the state treasurer's office. We've been charged with financing facilities and working capital on behalf of participating parties. So the CSFA Act is very broad. Participating parties include school districts, community college districts, county offices of education, and then nonprofit borrowers. And so we actually did pitch to the Small School District Association about 3 years ago, because where a CSFA really adds values for districts are off-balance sheet financings like COPs and lease revenue bonds, and then aggregating or pooling of financing. And so the TRAN program that we're going to talk about today is really a great example of how a pooled financing can really bring down the cost of borrowing, and then the program that we've developed to help facilitate and smooth over the deferrals that the state is enacting. What we put together is considered a state credit. And so that's going to also bring down disclosure responsibilities for the district. And Annette will get into more of the key features of the program. We did pull some interesting data regarding small school districts and some of the districts that we are assisting or who have applied already through the program. And we really are hitting a lot of small school districts at this time. So I will be able to share that information, Tim, with you, and you can disseminate it to this group after the call. But we're really hoping to bring in more small school districts, given how streamlined and how inexpensive we think this program is going to be to help those districts weather deferrals where they might be, have resource constraints or maybe haven't even issued a TRAN because we haven't needed to in so long. So CSFA will be serving as the issuer. So the financing will go to the capital markets, and the California School Finance Authority will be kind of on the cover as the issuer. And we're serving as the issuer because of our state level intercept. So the intercept is allowing us to capture the revenue that would go to districts having borrowed them against their deferrals, and it'll get transferred to a trustee on behalf of individual districts.
Great.
And so Annette Yee is our advisor on the financing program. She's with Montague DeRose and Associates, and she has a long history of structuring note pools and financings throughout the state. So I've been at CSFA for 20 years, which is a long time in state service. I enjoy my work. And prior to that, I was an investment banker and an advisor to school districts and municipalities throughout California. So nice to meet you all.
Thanks, Katrina. And thank you so much, everyone, for having us, Tim and Corey. And, you've already heard a little bit about me. I'm the advisor on this program. I think what I'll do is just go right into the program itself. I am a school board member, by the way, which is, Tim mentioned that, just so that you know. I've been on my board locally for 27 years. So I am a board member as well. So anyway, let me share my screen and go over this PowerPoint. Hopefully you're seeing a PowerPoint up here. Do you see it?
Yep.
Okay.
Yeah.
Let me start the slideshow. Okay, and this was targeted towards chief business officials. I know in small districts that you might have, you might be playing multiple roles. So it might be a superintendent that we're speaking to or a chief business official, I'm not really sure. But what we want to do is just really briefly tell you what is happening this year and why you might want to need to consider cash as a very important thing in this fiscal year in particular. And as you all know, this is related to the fact that school districts are are having cash deferrals because of the state budget. As you all, I'm sure, remember, in May of last year, when we were getting prepared to get the budget for this fiscal year of 2020-21, we were told that there was going to be a 10% cut to our budgets. And instead, the ending budget that was adopted by the state was actually ended up canceling that 10% budget cut, but instead replaced it with a cash deferral model where the state of California replaced an actual cut to our budget, which means a reduction in the revenues, but replace that instead with cash deferrals, which means that they agreed to still pay us the same amount as last year with no COLA, but they were going to pay us each of those cash amounts at a later time period. So for instance, they actually started in last fiscal year and they transferred, or they delayed the payment of our June cash, our apportionment, to July. And in this fiscal year, they're starting with February of 2021, and they're delaying that payment all the way till November of 21, March in October, etc., all the way down to this June to July. So the first deferral is actually being delayed. So our February apportionment is not coming back to us until November of 21. Now, how many of you can survive a situation where you're not being paid, but you still have to pay your bills? And that's exactly what the state is asking us to do. So that's why we're talking about that today. So I'm going to move on to what the level of the deferral repayments are. And it really depends on if you're a 559 district or a different type of district. But essentially, you're only going to get a portion of the monies that are due to you in February through June of 21. And the amount that's being deferred in each of those months is shown here. So you're only going to be receiving overall about 64% of the state aid that you were expecting in this fiscal year during this fiscal year. So that means 36% is being paid to you next year. And the higher that you are in terms of a state aid district, this will affect you even more. If you're a high property tax district, this will affect you a little bit less. And of course, that it will just depend from district to district which you are. I have a slide here on community college deferrals. That doesn't apply here, and some specifics on community colleges here as well. But I just wanted to reiterate that for deferrals for school districts, your local property tax collections are not going to be affected by this. This is about state apportionment, okay? But keep in mind that the local property tax collections may be affected by other issues, such as the fact that you are, that the governor actually gave an order that said that people could pay their property taxes late in this fiscal year, and they're waiving those penalties. Now, the actual decision of whether those penalties are waived or not is being made by your local counties. So it will depend on which county you are in, whether it's allowed, people are allowed to pay their property taxes late. And in fact, people might not be paying their property taxes or the full amount of their property taxes just because they're being affected by the recession that's come on, and maybe they've lost their jobs, etc. The deferral does not impact, by the way, though, the EPA funds. It's only on apportionment only. Whoopsie. And this is just some good ideas about what to do with respect to cash flows, some best practices. Make sure that you are beginning. I mean, I'm hoping all of you have been doing your cash flow projections through the standardized account code structure SACS reports that are required. And if not, if your county offices are helping you with that, this is the time to get familiar with how to do cash flow projections. And you want to do this on a monthly basis for 18 to 24 months out in advance, so you can figure out the situation, if you can, ahead of time, if you're going to be cash short. You also want to reconcile your cash on a monthly basis, and that means making sure you know what your actuals are for each month, plug those into your projections, and re-project your cash flows out there. And that's really important to do, to keep up with it, because projections are only as good as you keep up with, make sure they're accurate. These are some of the options that you have. I mean, when you are looking at your cash balances at the end of the month, if you don't have enough in your general fund, you may need to borrow from other funds that you have. I don't know what your options are for your particular districts, but you might be able to borrow, say, from your cafeteria fund or your capital outlay fund, etc. And if you can't do that, there are other options available to you, either by borrowing through the County Office of Ed or from the County Treasurer, or borrowing through the capital markets, which is what a tax and revenue anticipation note does. So we talk a little bit more about internal cash borrowing here. I'm not going to spend a ton of time on this, but if you have that available, if you can borrow from other funds, you want to do that first if you can, because it's the least expensive way to do it, is to borrow from yourself, because it's free. Here are the ed codes that govern internal cash borrowing. I'll leave this up on the screen for just a little bit, but suffice it to say that a K through 12 district can only borrow up till this fiscal year 75% of the fund balance in any other fund. But because of the need to borrow from other funds, the state is actually allowing us to borrow up to 85% of the fund balance, but we must take a resolution to our board and have a public hearing before adopting that resolution. The repayment terms are the same as required here, but you can borrow a little bit more. So it's giving us a little more flexibility to borrow. Community colleges don't happen to have any rules such as this, but from a K through 12 district, we need to stay within the rules of the ed code. And then one thing in particular, many school districts have bond funds that they have for building facilities, a GO bond fund. Typically, it is not advisable to borrow from those, and that's because it can affect your ability to the tax exempt status of your bonds, etc. And we really don't want you to have any problems with your bonds. So check with your bond counsel, your legal counsel, before you do that. Now, in terms of the external cash borrowing, as I said earlier, you could borrow from the county superintendent of schools, and there are different ways of doing that. Whether it's a conditional advance apportionment or a different type of borrowing. You also can do a property tax advance through the county treasurer's office. So those are options available to you as well. But if that is not something that you're able to take advantage of, then you might need to consider a tax and revenue anticipation note through the financial markets. Here is what a TRAN is. It's a short-term cash management tool that is only allowed to be issued to meet your cash flow needs. It will not help you with a structural problem. If you have, if your revenues are less than your expenditures, this is not the tool that's going to help you. In fact, you need to take care of that problem first, but this cash problem, which is being caused by the deferrals in this year, can be helped by TRANs. This will bridge your cash flow deficit, and you need to meet certain requirements that I've listed here in order for you to make that issuance on a tax-exempt basis. But basically, it's a way of borrowing where you sell a piece of paper to the capital markets, just like you sell your bonds, and they deliver cash to you before the deferrals begin. That's the idea of the TRANs. So when we talk about the TRANs for this year, your deferrals will be occurring in February through June of 21, but you will be repaying it you will be repaying the TRAN in the time period July through November of 21 next fiscal year, when you get these deferred apportionments back. These are the steps for a pooled TRAN. I won't go through all of these steps. What I will say is that we will help you along the way, and that in order to apply for this program, unfortunately, I'm sorry we're coming to you so late. The deadline to apply for our program is actually this Friday, October 30. And at this point, I'd like to just take questions. Maybe Tim, you have some questions for me, or some of the districts might.
Yeah, a couple things. One, thank you so much. And I had to turn off my video for a while and hit mute when I saw that they're only getting 64% of their money. I had to say a couple bad words offline, because that's pretty shocking. And I think two things I wanted to ask you is, I think some people don't ask for a TRANs because they may think it looks bad on the district. You're a board member, so in my feeling in this year, especially the lack of trust I have in the leadership at the federal and state level. We've been blindsided multiple times, and because I think their lack of experience, and then also everything came so fast. To me, it would be more of I'd want this in my back pocket. I just don't know what's going to happen. No one knows what's going to happen. We didn't see this coming in June, and we took it, but it's already, late October. And don't you see the TRANs as not a slight against the district's, let's say, credit rating, but it's just really a protective way to have a multiple backup system in this day and age?
It absolutely. And actually, it looks much worse on you if you run out of cash and you need to get a state loan. That absolutely would affect your ability to borrow in the future or access the capital markets in any possible way.
And what if you apply and don't need the funds, or things change? So let's say you put the application in. Is that just like having your credit line on a credit card type of deal?
It's just literally submitting an application that, best case scenario takes 6 minutes, worst case takes 20. There's no obligation to issue the notes in February. Folks that are applying, we're going to break them into smaller groups and look at each individual district and their needs. So there is no real obligation. I mean, there will need to be steps that are taken at the board level in terms of accessing the debt with a resolution. But you'll have worked with our financing team before any kind of resolution goes to the district.
Yeah, Katrina, I think I told you yesterday, a couple of my board members who are fantastic superintendents have already submitted and have pretty decent, if not great, reserves, but they really have uncertainty. So they're putting in. They're not messing around, because they've seen people drive on June 30th down to a bank or wherever they could find money. I had that happen one time around the 27th of June where they're scrambling to meet that need. And it's a little different than I would say during the bad recession because the county offices have a little bit more money to help. But even then, you're not sure that's going to happen with what they're facing. They're facing the same issues we are.
Mm-hmm. Well, and so many, so many districts are asking for that county money at once. That think of all those districts simultaneously needing that money. They can't. Most counties cannot meet the need of the districts who need it. So that's the problem with the county option, unfortunately. I mean, counties who can do it, wonderful, but the ones who many cannot. So, and what you will need to do is after the application, at some point you do need to commit to going forward with the loan. And that point is when we are getting ready to post the preliminary official statement, which is the sales document for the TRAN. And that time will be around the middle of February, but you need to apply first and go through kind of the steps with us up to that point. And then you say yay or nay at that point, whether you go forward or not. And the benefit from for this is that by going forward, we will help you with your cash flow if you need to do one. And by the way, for a lot of small issuers, you may not need to do a TRAN cash flow in order to borrow through our program. And that's because our program has an option called the state credit option, where the state is actually providing its credit on the program, which means that you don't go through the rating process. You, in fact, the state does that for you. And so since the state's credit is what is being evaluated, you just fill out the application and then do your board resolution. And if you qualify for that state level of TRAN, and one of the requirements is that you cannot borrow more than your deferral amount, but say you got to that point, and if you're small enough, you can actually issue on a taxable TRAN basis, which is a lot simpler, and you will not have to do a cash flow. And I've already spoken to several districts who qualify for that and who are going to move forward in that way. And then there's just a lot fewer requirements.
Yeah.
Two quick questions. One, I wanted to reiterate or have you reconfirm, because we have to trust and verify these days.
Sure.
6 to 20 minutes for the application, because that looked like a lot of fancy slides there. You're saying 6 to 20 minutes with your guys' help? That sounds like something small. We don't usually have to get luck like that.
To just apply, it's very quick. It's things like the name of your district code, your your ADA. We'd like you to attach your financials if you can. If you can't do that, then that's fine. So it should be readily available. The answers to all of these questions are pretty straightforward for most districts. There may be some that you don't know, like what is your total deferral amount? Or, what is your projected deficit? How much do you think you're going to go negative? If you don't know that answer, leave it blank. So that's why it only takes about 20 minutes to apply. The next steps will take a little more time.
Yeah.
But to get your foot in the door to apply, no obligation, doesn't take a lot of time.
That's the one that's due on the 30th?
Correct.
And it's linked here. Unfortunately, you do need a login for the application. Otherwise, we would show you the application, but you do need to create an account. And that is, that is pretty easy. We've had one district out of 137 who have had an issue logging in.
Mm-hmm.
Great. And there's one last thing. You said because this bond is a state network
Credit.
or state credit, it's not, it's finish the sentence for me as far as for the district.
Well, the investors won't be looking at each individual district.
Okay.
They're looking at the mechanism and the financing that we've created using the P1 amounts that we're going to get from CDE, the intercept mechanism built into the CSFA Act. So we've worked with Fitch, which is one of the 3 rating agencies, and the actual structure received an F1+ rating.
Great.
So again, if each of these districts were to go out, or even with a pool, and Annette can speak to this, you know, and pool their individual borrowing amounts, they would have to, there'd be an appendix with detailed information about each district, but because of the state credit, that's what investors are looking through.
Right.
Great.
You want to add to that, Annette?
Yeah, I thought, well, I put up on the screen
Oh, that's great.
just a slide from a different presentation that I've made that talks about the difference between a traditional TRAN pool and a state credit TRAN pool. And it's contrasts the two. And we talked about a lot of this. I mean, Katrina just explained a lot of it. The whole idea is to make it simpler for you. And by doing the state credit, you don't have to do a lot of the hoops that you normally would do with a traditional TRAN pool, and especially if you were to issue on your own. So it's just that things are simpler. There's the payments are made for you, as Katrina had said earlier, for the state TRAN pool. And because the state credit is on the line instead of your individual credit, you do not need to worry about your rating coming into play. Everybody has a high level homogeneous credit from the state of California.
Great.
And
that's another thing, just to add, Tim, you know, if there's a district with a negative or qualified certification, you know, those schools are looked at the same as any other district. So we did have through SB 820, an amendment to the CSFA Act that allowed districts with a negative or certified, or qualified rather, certification to be kind of held harmless and brought into the financing and be able to access the intercept.
Got it. Well, hey guys, thanks so much. And Annette, I am going to follow up with you. I think your training for board members for small districts would be in order. We're doing a lot of overall board training, but a budget one would be fantastic. So I'm going to send you an email, welcome you to that. And we thank all you guys thank you both for your time and your work, and we'll get this out to all of our members as we tape it. We'll send you a copy of the video too, okay?
That's great. Thank you, Tim. Thank you, Corey. And I'll send you that data on small school district.
Oh, thank you. Appreciate it.
thank you.
Take care, everybody.
Take care, everyone.
Thank you.
so much.
Bye-bye.
Thank you. Bye.
This time I am going to stop